So these are my analysis for the week for some Forex pairs, and I am starting with AUD/CHF. I am on the weekly time frame, so I am always going to start from a higher time frame, and then I will do a top-down analysis to know where the direction of the market is. On the higher time frame, we can see for AUD/CHF we are in a downtrend. So we will now go over to our daily time frame to also see a similar thing. We are still in a downtrend on the daily time frame. You go to your 4 hours, it is now corresponding as well with our higher time frame. So we are still in a downtrend, and we have a first touch, second touch. Now we have a third touch on our trend line showing the direction, and the 4 hours is also aligning with the weekly, the daily time frame. So we now go to 15 minutes to wait for 15 minutes to align with all of these 3 time frames, the weekly, daily, and the 4 hours. Once it aligns, then we take our entry. So I am going to 15 minutes right now, and we can also see that 15 minutes had already aligned even with the weekly, daily, and the 4 hours time frame. We have an entry when this market opens and the spread collapses 11 p.m. UTC plus 1. I am going to take a sell for this. So you will short the market. Once the spread collapse, just look for an entry and you will enter and set as your stop loss just 20 pips above, because we don't expect price, even if it was coming based on the market structure, even if price was to retrace, we now have something like this: pullbacks. So if price is to pull back, it's not supposed to go above this previous high. That is the reason why I am setting my stop loss to be above this point. Is the same principle I am applying on AUD/CHF that I am going to apply on other pairs that I will be analyzing. So this is the reason for setting the stop loss above this level. Our 4 hours time frame, when we go over there, we can now see that we can even target this low. We can target this low, but you are really going to hold it for a very long time, because we now have the first touch, second touch, and the third touch of our trend line. So we expect the market to continue selling downwards, to continue with the trend to clear the next low that we are seeing on the daily and the weekly time frame. So you can see what happened. Market pulled down, a retracement, it cleared this other low, pulled down again, a retracement. So I believe we should also have the same thing, a pull down that will also clear this low. Mind you, when you go to your Forex factory, there will be CPI for AUD this week, the same way there is for dollars, FOMC, and NFP. So for AUD, we have CPI, and I believe by this time on Wednesday, that will be on Wednesday 2:30 a.m. here UTC plus 1, that may likely be the news that will push this market to clear this low. So that is what I am eyeing for this week. And most of other pairs with AUD, they may actually follow up the same way as well. That's my analysis for AUD/CHF for the week. I will go over to other pairs. So we now have other pairs. This is weekly time frame for CAD JPY. This is CAD JPY. And even on the weekly time frame, on the major structure, we have an uptrend. And even in the pullback that occurred here, in the pullback that we are seeing that occurred here, there is not any break of structure, because market is still swinging around this point. It has not broken this low. So there's no any break of structure. We are still in an uptrend. Even if you were to take just this point, we are still in an uptrend because week in, week out, it is being maintained. The uptrend is being maintained. So even if you were to maintain just this aspect, it is still aligning with the major structure, which is an uptrend. So all the weekly candles, we are bullish. Now we go to our daily time frame. We are still in the bullish as well. Currently, there is a hesitation or accumulation around here for the past 4 days, 1, 2, 3, 4, even 5 days. So let us go to the 4 hours. We now know that we are in an uptrend on the daily time frame. On the 4 hours, there is a pullback. So we are waiting for when these 4 hours will finally give us, let it break past this trend line. Then we will go to our 15 minutes. Whenever we see that there is a clear break of structure, so any of these candles, when another candle closes above on 4 hours with a full body above this, we know that price is finally pushing upward. However, we are expecting it may dance around this point until it comes to break somewhere lower to give better entries for people. But then we'll put an eye. Any 4-hour candlesticks that break this trend line that we are seeing to close above with a full body, we will know that there is a decision to continue with the trend on the weekly time frame and the daily time frame. And then you will go to 15 minutes to take your entry. But market structure that you will see when this has been formed. So we want on the 4 hours, this particular point that we have drawn, we want price to break past it and close with a full body. Then when you begin to see the market forming structures such as this, giving you clear swing points, swing lows and swing highs, then you can go to 15 minutes to take entry. You can use Fibonacci to take your entry, any of the lows, and you wait for it. Once price enters your 61%, you take your entry in order for you to continue with the uptrend. That is my analysis for CAD JPY. I will now go over to gold. So gold has been bullish on the weekly time frame. We can see when we go to the daily time frame, we are also still bullish, and price is at a major supply zone currently. So we are going to be careful with gold to know the direction where gold is heading to, because this is a supply zone. This is a supply zone. Price push here with this long wick that you are seeing on the daily time frame, it sold many pips, as tiny as you are seeing this movement. So from this point, gold sold down to this level. That's about 37,000 pips that gold move. And when it reached that level again, around here, there is a sell. So there is a lot of sellers around this level. Gold may likely sell this week because of this particular level. And from this daily time frame, we can see there is a trend line. So let us look, anything could happen on gold with this supply zone and with this trend line. Whoever breaks first, that will be the direction of the market. So we may likely have something that we keep trading within this point until we have a direction with a full body candle on the daily time frame, or we have one that will just break down below here and we have a pullback and the sell will continue, most likely downwards to somewhere here, somewhere to this level, because those that trade SMC will be waiting for price around this particular low. So we will have a reaction when gold gets to this point. This may take several days or several months, because the last time it reached here was April 22nd. So let's just wait. This week it may either break up or it will break down. Whichever way that it goes first, that will be the direction for that week. Now I will stop here. If you have any question, just let me know in the comment section. Do have a wonderful day. Bye.